Hey gang, we're going to kick this week off. I want to remind you of a scene from Jaws. All three of the main players in the movie are on the boat. The police chief's sitting on the back of the boat and he's chumming for the big shark, and Quint's in the wheelhouse and working on something, and Dreyfuss up top driving the boat, and all of a sudden out of the corner of his right eye the police chief sees the big shark, and then it disappears, and he just freaks out almost, and he starts backing in the wheelhouse saying, we're going to need a bigger boat. And he gets in there and he says it again, and Quint realizes he's seen the shark, and they rush out and everybody's watching for it. They all see it. And again the police chief says, we are going to need a bigger boat, aren't we? And what he's really saying is, I don't want to be in this boat with that big shark out there. So let's get out of here. Let's go home. Well, the thing I've been talking about for a little while is debt. I've talked about debt in the U.S. I've talked about the debt with Greece. I've talked about governments marking to model instead of marking to market. And so the debt problem continues to grow. This past week, Germany really hasn't said they will bail out Greece, and they haven't said they won't. So Greece is kind of getting the message that it's not going to be an easy road. So they went to the IMF. I think Greece has something like $50 billion in bonds that are going to come due this year, and they got to do something. Bond yields on Greece bonds this week went to well over 9%. I really think at the end of the day, that's not the top of that market. I think those yields are going to go higher. That thing's going to take a while to play out, probably 1, 2, 3 years. But the problem we're seeing there is that Greece has been in this situation for a long, long time. I mean, I'm talking about hundreds of years. They've not been responsible, and this thing kind of keeps coming up. And so everybody kind of looks at it and says that they're really not going to address it. But it's a situation where we are going to need a bigger boat. Somebody at Goldman used a phrase back in 2007, said, this time it's different. This time it's going global. Well, folks, it's not going global. It is global. Okay, and again, it's not going to blow up next week, but this thing's going to continue to unfold in a negative capacity for the next few years. I think credit quality is going to become an issue again, like it was in 08, 09. And so the problem is the U.S. is taking on lots of debt, so we're getting worse. We're still better than everybody else, but we're getting worse ourselves, and people are going to begin to look at it on an absolute basis rather than a relative basis at some point. That's going to drive the cost of our money up. Inflation is going to drive the cost of our money up. UK inflation came out this week at I think it was 3.7 or 3.9, something like that. So oddly enough, I think the FDIC took over maybe 7 banks on Friday, which is the same number they took over in all of 2007, I believe. So it's we're going fast forward here on this deterioration situation. Meanwhile, the U.S. equity markets continue to move up pretty higher and higher. About a little over 2 years ago, I had lunch with Steve Forbes here. He was here in Atlanta. I had lunch with him, and I asked the question, what do you think is the biggest thing out there that nobody's really talking about? He said it's inflation. I haven't had lunch with him in the last 2 years since that meeting, but I think if I ask him today, he would likely say, I think it's the hidden inflation. Okay, I don't know anybody that's really paying less for anything other than cell phone service than they were 2 years, 3 years ago. So things are rising. Yeah, housing prices have fallen, but realize they don't take that number into account when they're pricing goods and services for inflation number. They also don't take into account energy costs. Well, the thing is that I don't go buy a house every day, every year, but I do go buy energy every day because I have to get back and forth to the office. And so those numbers are continuing to rise. We'll comment about our holding on the energy markets in just a minute. But I will tell you this, we got whipsawed on the dollar. We sold out about 10 days ago. We bought it back this past week. We only missed about a 1% jump in it. It doesn't move real fast, but it moves. It's nice and trendy. And it just broken into the sell side about 10 days ago. It's back on the buy, so we bought it again this past week, and we're in that. To tell you where we are on the markets for this coming week, tomorrow we will short the Russell 2000. We will hold that likely until Thursday, maybe Friday morning. And then when we sell the short Russell position, we're going to take half of it and buy the long NASDAQ and half of it and buy the long Russell. And we'll carry those two positions into next week, okay? On the intermediate term model, we're still long the NASDAQ 100. On the modified intermediate term, we're still long the S&P 500. On sectors, we're still long technology. We're still long transportation, which had a great week. and we're still long for the third sector we hold. We're still long energy, which had a tremendous week. For the alternative asset class, I want to tell you, last Monday we sold China. It's kind of gotten real rocky here lately, and the technicals told us to sell it. So we sold China. So on the alternative asset class side, we now own precious metals. We still own real estate, which had a huge week. I will tell you this, I think when real estate rolls over, it's going to roll over hard and it's going to fall fast. But right now the technicals tell us to be there. We're there. We're making good money on it. And again, we're still long. We're back on the long dollar position in the alternative asset class. On fixed income, we're still holding high yield corporates. And to hedge out a little bit of risk there, we're short the 10 and the 30 Govy. Just as a hedge there, it's about a 12-15% holding. And then on the tax-free fixed income, we're still long the high yield munis. They had a great week. We love those things to move slow and steady. About every other day, they're jumping up, between about 15 bips and about 20 bips. That's a great appreciation move on those things, to do that about every third day. So they had a perfect week, really, in my opinion. Again, we're hedging out some risk there on interest rate pinch by being short the 10 and the 30-year Govy. Next Sunday night, there won't be a video update. This coming Friday, I have to go to Florida for a board meeting. And then Monday morning, there's a conference in Florida that I go to every year. It's at different places, but this year it's in Florida. It's for the National Association of Active Investment Managers. I'll be at that through Wednesday afternoon late, and then I'll hop home. So next week you will get an email update, but you won't get a video update. Obviously, we've got some technical issues we're going to work on with the video. It's real washed out behind me. We're very well aware of that. Also, I want to start throwing some graphs up here. Got some great stuff to review with you on that. So that's where we are, and you guys take care. Have a great week out there, and we'll talk to you soon. Bye-bye.